Manuka Resources. Today I'm going to focus, I will talk about the seabed mining, but I'm going to focus on our near-term gold and silver production assets, both in the Cobar Basin. And this is a presentation that we released on Monday through the ASX, and we also put out a resource update for Mount Boppy for our gold project. And what we are doing, and the purpose of this presentation, is to update the market. Up until now, we've been producing gold at our silver plant, but the silver price has doubled since we purchased the project back about 7-8 years ago, and it's doubled since we actually listed on the stock exchange in 2020, in July 2020, and we want to have two plants operating at the same time. So let me move on to the presentation. And it's oopsie. A standard disclaimer, there's nothing acute in that, but it can be found on my website, and as I mentioned, it was released on the ASX as well, this presentation. So about Manuka Resources, we're an ASX listed junior, and we really differ from our competitors because we have three unique features. Firstly, we're a producer. We've been producing gold, and then we moved on to silver, and then back to gold. We have two plants, both fully permitted, both with mining licenses. But up until now, we've only had one plant, which is a huge plant, a substantial plant, 1 million tons per annum plant. And so we're a producer, a developer, and an explorer. We've got near-term production assets in gold and silver, both in the Cobar Basin. And there's been a lot of attention on the Cobar Basin recently. One of the very deep copper mines, which is over 2 kilometers deep, just recently sold up in the Cobar Basin for $1.1 billion US. You know, at long last, the province, the basin is starting to get some attention. And then, as you know, as has been Julian has mentioned, we've got a large vanadium-rich iron sands resource, which is located just off the Taranaki Bight in New Zealand. And the company's focus now is to bring Mount Boppy gold back into production this year at Mount Boppy, because it means we can then move on very quickly and turn on Wonawinta to start producing silver. I'll give you all the schedules and the timetables in this presentation, but very briefly, Mount Boppy gold mine, it's a brownfields open pit gold mine. And what we've been doing since June of last year, we've been screening the waste dumps, the historical waste dumps and tailings. And going forward, we'll have plant feed from the same waste dumps and tailings, as well as all that remains in the open pit. The total cost for restarting a plant or putting a plant at Mount Boppy is only 11.6 million Aussie dollars. People think that looks very, very low, but we've got plenty of spare pieces of equipment at Wonawinta. We've got a spare ball mill, an elution circuit, a gold room, and so on, that won't be required for silver production. We're going to have a 5-year mine life commencing in Q4 of this year, sometime between October, November, December this year, and that'll generate 100 million Aussie dollars, or just short of 100 million Aussie dollars over 5 years. And that excludes any upside from exploration. And we do, as I'll demonstrate, we do expect plenty of upside from exploration success. Our all-in sustaining is very competitive with some of the lowest in the world. $1,060 US per ounce of gold. That converts to 1,600 Aussie dollars per ounce of gold, and the market at the moment is 3,700, so more than $2,000 profit per ounce of gold. Just briefly on the Wonawinta silver mine, this was purpose-built silver project. The plant, is a 1 million ton per annum plant, cost over $100 million to build. This was previously the only primary silver mine in the country. It's 150 kilometers from Mount Boppy, and so we were trucking the ore from Mount Boppy to Wonawinta to the plant previously, and that's been costing us basically $30 every time we send a ton of ore across. And we very quickly were able to do the maths, the arithmetic, that demonstrates with not much more than a year of freight, we put a plant up at Mount Boppy as well, which will be there permanently. both mine sites, both Mount Boppy and Wonawinta are fully permitted for a plant, but the previous owners dismantled the plant at Mount Boppy and sold it somewhere in Western Australia. We're going to bring out a silver reserve, which is quite a big thing now for us. This will be our first silver reserve. We'll bring that out next month, so within the next 6 weeks. And that will then be the stepping stone for finalizing the timing for silver production from the Wonawinta silver mine. Again, we have in 2022 we did produce silver from the mine as a trial program. And then very quickly, the Taranaki VTM project. I'll talk about this later on, but it's a big project, 3.2 billion tons. That's a JORC resource, largely magnetite with what will be a vanadium of 0.5% and titanium of 8.5% and a 50% magnetite, which is an iron ore. Mining license has been approved, and at the moment we're taking advantage of the New Zealand government's fast track approvals. So very different to some of the other people with similar market caps to us. Just talking about our market cap, the company has 672 million shares issued, roughly 9 cents a share. We've got a $60 million Aussie dollar market cap. And when you consider we're going to have 2 projects in production, one this year, one early next year, and then we've got all the upside from the New Zealand project, I believe that this is a very cheap company at the moment. What we think will be price catalysts, share price catalysts coming up over the next 6 months. Obviously, as Matthias and Julian were saying, with all the world turmoil, we expect to see the continued strength in gold and silver markets. This company, Wonawinta, was the largest silver producer in Australia. So everybody produces in Australia, not everybody, but there are a number of companies that produce silver concentrate, but we're the only company that produces silver doré, silver in metal. We're going to take a final investment decision on the restart of Mount Boppy. Actually, we've made that decision, but it's going to give us the perfect excuse to make another announcement on the ASX. The board has made that decision, and the reasons are compelling, as you'll see from this presentation. We're bringing out the reserve update at Wonawinta. That'll be in May, so within the next 6 weeks. We expect further progress from the VTM, the New Zealand project, with the approval process, and the approval process could be as soon as 90 days, to be honest. And obviously, the start of gold production at Mount Boppy in Q4 will be very exciting. We're the only new producer of gold in Australia this year. So of all the mines in Australia, this is the only project that's going to restart, with a plant out at Mount Boppy that's going to restart gold production this year. Board of directors, I won't go into them in too much detail. There's plenty of experience, plenty of grey hair there. I will talk about Alan Eggers. He's a geologist with over 40 years of experience. But most importantly, what really attracted us to him or attracted him to us, actually, was the fact that he started a company years ago called Summit Resources. He started a company called Summit Resources and built that into a ASX listed top 200 company, and eventually sold it for over $1.2 billion to Paladin Energy, which is a uranium producer and miner. And Anthony McPaul, he was the general manager in Newcrest Cadia Valley operations. Cadia, for those of you who are not aware, is actually, if it's not the largest gold mine in all of Australia, it's number 1, 2, or number 3. And that's in Orange, in New South Wales. There's a little town called Orange, which is about 4 hours away from Cobar, where all our assets are. The project execution team, Rod Griffiths is our project manager. He's an engineer. He's been in the business for a long time. Dieter was actually the chief metallurgist at Cadia, the largest gold project or operating gold mine in the country. Phil Bentley comes with 40 years of experience. He's a geologist. He's our chief geologist. Previously, global head of exploration for Trafigura. He's principal geologist for CSA. He's worked at Senco Gold and been operating out of South Africa for the last 20 years. And why I'm so excited about Mount Boppy. This has been previously one of the richest gold mines in New South Wales. It's produced over 500,000 ounces of gold at 15 grams per ton. 15 grams is half an ounce in every ton of ore. Just to put that in perspective, that's its previous production. We purchased the project in 2019, and between 2020 and February 22, we mined, oopsie, sorry, I've gone lost here. Sorry, gentlemen. I'm just going to bring this back on track now. There we go. We mined just 3 grams gold and produced over 41,000 ounces of gold. Very profitable. We more than doubled we doubled our ASX forecasts. We listed on the ASX in July 2020, and our expectations were to produce between 20 and 24,000 ounces, and we produced 41,000 ounces. Yeah, all we're doing is mining what the old timers left behind. So the old timers started mining Mount Boppy between 1895 and 1925. And as you can see, the top of the page produced 500,000 ounces of gold at 15 grams per ton. And that was obviously using shafts and tunnels and underground mining. And what we were able to do is just go and remove, just basically drill and blast all the area that they've been down into. And we were only halfway through. They got down to 200 meters. We're only down to 110 meters. I'll show you that in a slide coming up. There's all infrastructure remains at Mount Boppy. And just to put this in perspective, I hope you can see my cursor. This is Mount Boppy at this star over here on the eastern flank of the Cobar Basin. And Wonawinta, which has our large silver plant, that's over here. So it's 150 kilometers across the basin. And that costs basically $30 per ton to truck across. The high points, the highlights, a very low capex, low upfront capex to put a plant at Mount Boppy, 11.6 million Aussie dollars. The 5-year mine plan demonstrates that we'll produce very close to 100 million Aussie dollars over the 5 years, and that's just from processing the waste materials. No gold exploration success is included in that. We'll produce 48,000 ounces of gold. Forecast AISC, all-in sustaining cost, I've discussed that. Importantly, the pre-tax IRR from the gold project is 155%. Oh, I'm not getting used to this, am I? So the mineral resource estimate, we announced on the ASX an updated mineral resource estimate on Monday morning, and this highlights the fact that we've got 164,000 ounces of gold. And gosh, I'm sorry, guys. I'm not doing this very well. And people say to me, isn't the grade reasonably low in that? And the reality is, we are going to process 1.8 million tons of material. 1.8 million tons of material. We're going to screen that. We reduce that down down to 55% of that. So there'll be 1 million tons going through the project over the next 5 years, 200,000 tons per year, and the grade for this material is 1.74 grams per ton. The beauty of this is there's no mining cost. So our biggest cost, which is mining, is eliminated, because this is a photograph of the layout, and this large waste dump is 4 million tons of waste, from the old timers all the way through to recent production. And these are the average grades that we've got there. We've got 4 million tons. We'll be processing 1.8 million tons through the plant. And actually, a big opportunity for us, besides that, is to put up a heap leach. The heap leach is targeted to go over there. We've got 900,000 tons of ore at around 1.4 grams per ton. Heap leach is very low capex and very low opex. That will set up the 900,000 tons will generate, on top of our 48,000 ounces, that'll generate another 40,000 ounces. I haven't built it into this model because I'm hoping for another invitation back to come and present again. No, I'm only joking. I haven't built into this model because we haven't finalized the numbers. but we'll have them ready within the next, two or 3 weeks. The final numbers, it'll be that soon. It should add another 50, 60, $80 million to this project, because capex for something like that is so low, and 40,000 ounces at the current price generates 125 million additional dollars. This is the layout of the project. That's the pit at the moment. That's the tailings, which we'll be processing as well. And as I say, of the 4.2 million tons of ore, we are only going to take 1.8 million tons through the plant, and then we'll put up the waste dump, not the waste dump, sorry, the tailings. Oh, I'm getting completely tongue-tied. We'll put up the leach pad at the same time. We'll be putting up a leach pad to process the 900,000 tons of ore. The pit, the old timers, this is a side view of the pit, and the old timers went all the way down to this level over here, which is over 200 meters deep. They didn't stop because they ran out of grade. They stopped because there's water there's a natural spring feeds into the pit, and water technology in the early 1900s is not like it is today. The pumps today keep the pit completely dry. But they had a lot of trouble. The deeper they went, obviously the deeper the water, or the faster the water came through. We've only mined to this level, to halfway of their depth. We've been drill and blasting. The rest is just a maze of tunnels and shafts, and so we'll be looking to get back into that during the next 5 years, not fully included in those numbers. And the exploration potential, some of the holes we've drilled at Mount Boppy, 22 meters at almost 12 grams. That's 160 meters deep, from the RL, from the surface. We're down at about 100, so it's another 50, 60 meters deep. But it just demonstrates the potential from this. Besides the fact that we've got the 5-year plan, there's plenty of exploration upside as well. Besides Mount Boppy, which is highlighted by the star, we're also going to explore the Pipeline Ridge. Pipeline Ridge has got some very high intersections of gold. So we've put holes into the ground at Mount Boppy, but we've never drilled Pipeline Ridge ourselves. These are historical drill holes drilled by others. We've got all the drill reports and hole and all the hole evidence to confirm these results. Grades of gold, but somewhere between 1.8 and 4 grams per ton of gold. We've got some hits in copper as well, just further on in this pipeline deposit, or this pipeline project. Copper between 1.75% up to 2.5%, and we're watching the copper price rising with a lot of interest. This is a very much a key focus for us to start exploring at the Pipeline Ridge, putting drill holes into the ground. Phil Bentley, our chief geologist, thinks we're going to have a shallow oxide resource from gold of over 200,000 ounces of gold from around a 2.5 gram grade, 2.5 grams per ton, and he thinks that's achievable within the next 3 years. Timing and procurement. The reason we can do it or build a plant for $11.6 million is we have a lot of equipment on site, and we have a lot of equipment at our silver project, which is surplus to our requirements for silver. Crushing and screening equipment is already on site at Mount Boppy. We've been doing this since June of last year up until December. Ball mill and the Gecko modulation circuit will relocate from Wonawinta. The RPJ, the inline pressure jigs, pre-concentration, those are already on order, so that's all good. And then the intensive leach, this over here, the intensive leach reactor comes from Gecko as well. Same company who we've purchased, got a good relation. They've also got a laboratory. They do a lot of work for us on laboratory analysis. So that's what we see happening at Boppy very quickly. And then the opportunities is the heap leach, as I've already spoken about. There's plenty of exploration potential. And any success, we are able to double the size of the plant. So we're going to start out with a 200,000 ton per annum plant, but very easy to double the size. It's going to be a modular plant, looking quite similar to this. APT is the company that's producing our float circuits. This is an example of it. This is not what ours will look at, but this is an example. You can see a very contained footprint for a plant that can produce 200,000 tons per annum, and we can run them in modular fashion, put just two alongside each other. That's just an overhead view. I'm going to move on in the interest of time. As we've mentioned, we're going to produce 48,000 ounces of gold. The production schedule is pretty much a straight line. It's around 10,000 ounces per year, and then obviously any benefit from exploration upside, that just adds to it going forward. This is the main reason why we decided to set up plants up at Mount Boppy. Trucking the ore to Wonawinta has, of 200,000 ounces per year, 200,000 tons per year, would cost us over $7 million per year. And that's wasted money, just wasted cost. We can put on a plant at Wonawinta, at Mount Boppy, that's purpose-built, designed for the right size, and besides saving money on haulage, we've got a far lower cost of production. We're going to produce gold doré that gets sold to the ABC refinery in Sydney. They pay us at mine gate, very efficient. And then what I haven't discussed is with all our gold doré, we get silver. So Mount Boppy gold, when we were mining Mount Boppy, we had a ratio of 1:1. 1 ounce of gold gave us 1 ounce of silver. That's not so exciting, but when we've been processing the waste material, we've been getting 5:1 ratio. 1 ounce of gold gives us 5 ounces of silver. And so that's that's 250. That would be 250,000 ounces additional. We haven't factored any any silver credits in our equations, whether it's 1:1, which is the minimum we get, or 5:1. It's just going to be beneficial to the project, additional to the project. Costings. Look, the key costing is the float circuits, the float circuit and concentrate circuits. But what is important, we've got plenty of money in here for contingencies. We've got two months of operating costs for the ramp up, and then we've got $3 million in contingencies, which includes, there'll be some money spent on logistics, on relocation, but we'll have around $2 million left over for contingencies. And finally, on this project timetable, we're already in Q2. Obviously, the mineral resource update's been announced. We'll start relocating generators from Wonawinta next month. The tailings dam construction starts next month. We'll relocate the ball mill and the dilution column in Q3, so July is probably when we're going to do that. But we expect to complete this before the start of Q4. We're saying we'll only be in production in Q4. We've given ourselves plenty of time, 50% of the timetable as a contingency. So that's Mount Boppy, which is for us a very topical story to take advantage of gold prices and get back in production within the next 6 to 9 months, with that work that's going to get done. As far as Wonawinta is concerned, this is a picture of the Wonawinta plant. Its nameplate capacity is 850,000 tons, 850,000 tons per annum. But really, when we were processing silver in 2022, part of the focus was to increase the throughput, because silver is such a low value product. You want to get as much as you can through. We increased annual production to over 1 million tons per annum. So nameplate on the plant when we purchased this project was 850,000 tons per annum. We can demonstrate to the market that we can get more than 1 million tons per annum through, on an annual basis. There's a 51,000 ounce silver resource that's current, and we'll be bringing out the reserve in May. This will be our maiden reserve. This will be the first silver reserve we've bought out on Wonawinta since we took over the project. And the beauty of this project is it's very, very shallow, and we've done some drilling. So it's very important everyone understands that the Cobar Basin, I've mentioned already, is a very deep basin. It's over the copper project that recently sold, they're over 2 kilometers deep and still going deeper. The Peak Gold Mine, which is just up the road from our Mount Boppy project, is over 1 kilometer deep and still going. Our Mount Boppy mine went down to 200 meters. This red area, which is the open pit at the Wonawinta Silver project, is only 60 meters deep. We have put some holes. We had a proof of concept drill program in 2021, 2.5 years ago. And that demonstrated that we've got a typical lead zinc silver mineralization strike just beneath the pit. And the depth of these holes ranged between 150 and 200 meters deep. So we're not looking at very deep at all. There's 2% combined lead and zinc and 43 grams of silver. But most, what really we more interested in is the 7% combined lead and zinc with 63 grams. The typical lead zinc silver project in the Cobar Basin is what they call a 6-3-60, which is 6% zinc, 3% lead, and 60 grams silver. We haven't quite found that yet, but we'll be spending some money once we restart Wonawinta Silver project, which will be in Q1 or early Q2 next year. We will be looking to spend money on exploration. This year's exploration budget is going to Mount Boppy and Pipeline Ridge. And then looking to wrap this up over the next few minutes, the Taranaki VTM project, which is it's essentially a iron ore project and comes with the benefit of the huge added advantage of 2 critical minerals. Titanium and vanadium are both critical minerals in the USA, the EU, Canada, and in Australia. And the reason for that is because 55% of all vanadium comes from China, 20% comes from Russia, 15% comes from Brazil, and this is what lithium is to the mobile vehicles. Vanadium is to grid storage and large scale storage, battery storage. It's not flammable. There's been a number of instances with lithium batteries just spontaneously combusting. Vanadium cannot do that, and it's 100% recyclable. And what its other benefit is, one kilogram of vanadium doubles the tensile strength of steel. Now, so very used for military application, for strengthening buildings and so on. What we're so excited about is this project is in the lowest cost quartile of iron ore producers, and then on top of that, so we'll be producing a 57% iron ore with 8.5% vanadium and 8.5% titanium or titanium dioxide and 0.5% of V2O5, vanadium pentoxide. These are the numbers in our JORC resource, but we will be concentrating these to a 57% with a 57% iron ore with 8.5% titanium dioxide and 0.5% vanadium pentoxide, and we get those for free. Even with our iron ore in the lowest quartile of the cost curve, I've just lost this. So I do apologize. I've got no idea where my shared screen has gone. Let me just see if I can get that straight back up. Sorry, guys. I think I've lost this. I'm not very good.
We see it back, Dennis. Now you're back full screen.
Oh, sorry about that, guys. Right.
No, you're good. All good.
Anyhow, that's the wrap up. Just very briefly, last 4 points: near-term production gold, near-term production silver as well, actually, just a few months later. And then we're waiting, and we expect news from the New Zealand government. They've already had the first reading in Parliament of their fast-track legislation. We expect this to be coming, legislated over the next 90 days, and approvals will follow promptly. We have been invited to submit an application, and that's going in next week. Thank you very much.
All right. Well, Dennis, you realized something incredible. You went through your presentation and we still have 5 minutes left. So this is great.
I hope there's
Good
a
job
question.
on that. I mean, this is difficult. You have two so interesting projects and the raise in the price of gold and so on. It is mesmerizing. So as I thought, Armin has a first question. You said 11.6 million Australian dollar for the gold mine. Where do you get the money? Is it already financed because you want to restart in Q4?
Correct. So the money it's not already financed. And you know, that is going to, we're in discussions with our lenders at the moment, and but we expect that the money will be forthcoming.
Perfect.
And
Second
yeah,
question, Thomas Müller, which also quite often has question, is asking, your silver project needs a high silver price to be profitable. Why do you invest money to make the resource bigger?
It does need a high silver price, but the price is there now. The price has doubled since we purchased the company. And look, our silver cost price is going to come out. I can only talk in range at the moment because at this point we haven't bought out the reserve, and so what's not public to the market, I can say our expectations are we've got all the pit optimizations. We will expect to bring out a 5-year and an 8-year project. And we expect the cost, the all-in sustaining cost, to be in the low 30s for silver. The beauty of silver, I just need to put a couple more words on this. The beauty of silver and gold is there's a contango. What that means is if you have to put on a hedging program, for say 30 or 40%, just to make sure you've got your costs covered, you pick up 4% per year in silver and much the same number in gold. So although if silver price today in Aussie dollars per ounce is $44, which it is, you get more than $2 for hedging 12 months time, and a further $2 for 24 months time. So the market actually works in our favor. So we can lock in our cost structure. We can lock in our cost structure based on the current size, and the project is cash flow positive. Very healthy at these levels. Yes, we're expecting, we haven't got the final numbers, but we're expecting it's going to be in the vicinity of what I've been able to talk about for gold. We're going to have in the similar sort of numbers for silver.
Perfect. This is absolutely, those are incredible numbers, and I think it really, really, really makes sense. One question maybe to educate our investors, Dennis, how do you sell gold?
So we sell gold in ingot form to the refinery. So an ingot is just a unrefined gold bar. It can vary in grade. Ours is very typically 50% gold, 50%, or 45% gold, 45% silver, and then a few no nasties. We have no penalty items in our doré or brick. It's a gold brick, but it's metal, so it's called doré ingot. And we get paid about 99.6% for both our gold and full value silver as well. And the refinery. So there's a big refinery in Sydney called the ABC refinery. They come and collect it with a secured vehicle from mine gate, and we get paid promptly. We get paid the same, there and then, essentially the same day. There's a funds transfer takes place, and we get paid that same day, that same afternoon. Does that answer the question?
Exactly. Yeah. Absolutely. Most people don't know exactly how it comes. It doesn't come obviously as gold coins and so on. You've got a refinery that buys it and then that either sell it or produce those coins or so on. But this is always an interesting
or give it back to us. Or else we can also, sorry, the one point I should make.
Yeah.
Alternatively, we can just pay them a refining charge and take it back from them. So for example, if we have some interest from somebody for silver, there's often interest in the Australian markets for silver. We may just ask the refinery to refine it and send back and give us something back.
Well, this is great to hear. So, Dennis, we're out of time. It's now 11 here in Vienna where I sit. I want to thank you very much for the presentation, to see the update of the project and so on. It's very, very exciting. We're all looking forward for you to succeed in the reopening of the gold silver production and then the continuation on the permits for your vanadium seabed project. So Dennis, Thank you very much, and we might see each other next time again.
Let's hope. Thank you very much. Thanks for having me again. And thanks everybody for listening. Thank you.
Thank you.